Hi, I'm Bob Power with OTC Markets Group, and we're pleased to be joined for our monthly market update by a special guest, Cass Sanford, our Associate General Counsel. Cass, thanks for joining us for the update.
Thanks for having me, Bob.
Glad to have you. Cass, give us an update on recent legislative developments on Reg A Plus and how that benefits our smaller issuers.
Sure. We're very excited about the Senate banking bill that just was signed into law last week, 2155, which will allow SEC reporting companies to use Regulation A Plus. Just for a bit of background, Regulation A Plus is a capital raising tool that came out of the 2012 Jobs Act, which allows small companies to conduct online public offerings. And as it was originally enacted, Regulation A Plus was not available to fully SEC reporting companies. But now, as of last week, SEC reporting companies can use Regulation A Plus, which is very exciting, and we're very happy to have had a part in that. It's partly based on a 2016 rule proposal to the SEC, which then turned into the Improving Access to Capital Act, which was then rolled into the Senate banking bill last week.
Well, that's great. It's great to see that our advocacy for this issue was able to make a difference for our OTCQX and OTCQB companies.
Yeah, it's very exciting.
Yeah, great. Talk about Blue Sky. What's the latest on Blue Sky developments?
Sure. So we've been working with individual state regulators for about 2 years now, and we've been working with them to get regulatory recognition and Blue Sky exemptions for secondary trading purposes. Right now, the OTCQX market is exempt for secondary trading purposes in 30 states, and the QB market is exempt in 27 states. We have a couple additional states that have just announced rule proposals, so we're expecting them to join the list soon, and we're going to just keep working towards getting all a nationwide recognition for both OTCQX and OTCQB markets.
What other regulatory initiatives are we working on to benefit our smaller and all of our issuers, OTCQX and OTCQB?
Sure. So two issues that we're focusing on in 2018 are margin eligibility and employee stock ownership plans, or ESOP plans, for OTCQX and OTCQB companies. So on the margin eligibility side, what we're trying to do is update outdated regulations which don't allow OTC stocks to be margin eligible or held in margin accounts. And then for the employee stock ownership plans, what we're similarly trying to update outdated legislation. Right now, OTC companies, including companies on OTCQX and OTCQB, are not allowed to use their publicly quoted price to offer employees stock ownership plans to their employees. They're actually required to get an independent appraisal, which is quite costly. So we're working with policymakers and legislators on both of these issues in 2018, and we would welcome any support from OTCQX and OTCQ companies that'd like to join us and help us with these issues.
Yeah, these are really important initiatives, so thanks for your hard work on that. And thanks for joining us on the monthly update.
Absolutely.
We'll see you again next month. Thanks for watching.